Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Monday, September the 27th, 2010. Well, a continuation of the trend to the downside, and we have a candle that's making another higher high and a higher low, same as the previous candle. Characteristics of this candle, though, are very different. Previous candle we had a very large green body, which was a very bullish candle. The most bullish type of candle that we can have. Today we have a much smaller red body. That tells us that the strength that the bulls had previously has evaporated, and even though we have a trend to the upside, the sellers have taken control of this market by closing the market down towards the low or at the low. The sellers have also been in control for the entire day by opening up near the high and closing down near the low, and they showed strong commitment to taking this market lower throughout the day. The commitment from the bulls has dried up. So the short-term dynamics in this market, regardless of there being an uptrend, favours the bears. That does set the market up for a potential change of trend, and if there is to be a change of trend, we will need evidence of that. So that would be a lower high and a lower low, so we should be on the lookout for that. Now obviously this area around 1150 has had its influence again, and this was a previous area of support and resistance. During the week we saw that the market found resistance around that area. The market actually traded just above 1148. And we saw the influence from that 1150 region, and the market sold off over 3 days, rallied again very strongly, and the market tested the 1150 again and sold off again. Certainly not as strongly as previously, but there is potential for the market to sell off as strongly as previous. Now, if the market does sell off, if we do have that lower high and lower low, we do need to watch this area around 1133, which was previous support and resistance, and may not be as significant for this coming week because the market traded down through there 3 days ago in a quite a bearish manner. But the area down below there around this 1120 region, from probably about 1123 down to 1120, offers some decent support as well. Down below there we have a window which will offer very strong support to the market. That's roughly about the 1110 region. So if the market does come off significantly, then we should see the market hold up around that area. Down below there we have the influence of the cloud, which will provide support, and another window that was opened and previously, which is trading through the cloud there. Now, in Ichimoku charts terms, the market is still positive in the big picture terms. We are trading up above the cloud. The market is bullish in the medium term and fast term time frames because we're trading up above the Kijun Sen and the Tenkan Sen. Now, just looking at where the market's trading in relation to the cloud and the Kijun Sen, we are a fair way up above there. So the market is looking a little bit overextended, and if the market does come back to test some of these support areas, it wouldn't surprise too much, because markets can't be trading at extremes for long periods of time. They need times to relax, and either congest or pull back. So there is a possibility of that happening. In Japanese candlestick terms as well, this may be, some people may be tempted to call this a Japanese candlestick reversal pattern. We do have a potential harami type pattern, but we do need a trend to reverse, and we've only had a new first time frame uptrend of 2 candles, including this candle. So strictly speaking, because we don't have much of a trend to reverse in time scale, then purists might not call this a reversal pattern. In magnitude of the first time frame uptrend, though, the market has traded a fair way up above the previous swing low, so the sentiment of this, the structure of these candles is the same as it being a harami pattern, and that's where we have this bullish candle, fairly large bullish candle, and a bearish candle now that's completely engulfed by the previous candle. It's within the body of the previous candle. And that tells us that the buyers that were making strong net progress have failed to make that progress once again, and the bears have made progress within the candle. So it raises doubt about the continuation of the trend to the upside. So over the next trading day, obviously the 1150 region is very important to this market. For the market to continue up to the upside, the market will need to test that area and take it out. We'll need to close up above there. And in a fairly bullish manner to continue trading to the upside. To the downside, we do need to watch the low of the current candle and the support down below, initially around the 1133 region and down to around the 1120 region.